following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, and this is the Tiger Technicians Hour, and the Dow's down 242 points at 17,333 testing. 200-period moving average, it broke it. 17,210 would be the left side, right side price time match by Monday. All we're doing so far is remaining in a trading range between 17,200 and 17,900. Let's call it 18,000. It doesn't feel like that because there have been such incredibly whoopy days. But the MACD and the stochastic have been very poor, deflected lower, went under 80%, and that's suggesting that that 9-period exponential moving average, that maroon line right there, is tremendous resistance. So that's at 17,584. We'll go into all these details. Let me just run the numbers down. First of all, I want to thank all of those who attended my webinar last night on the parallels between the Chapman wave former peak that we had made back in May and the Elliott wave formation, and what it would take for the Dow to get to the 18,352 level to break to a new all-time high, which would then impart, at least to me, the information that says we have begun Elliott wave 5, which is usually the most spectacular move to the upside. I don't know how it can do it, but those are the numbers that we're going to be looking at. However, our bias has been certainly in our portfolio to be on the short side, and we'll just deal with things as they come. Now, I'll get to some of the other aspects as we move along. I said I'll take questions whenever they come up because it's really important, I think, for all of us that we feel comfortable in the time frames that we're looking at. The shorter time frame says until Tuesday, maybe Wednesday, very whippy. After that, we'll see what happens, and we'll talk about that. And there's plenty of time to talk about that. Today is Technical Friday. I want to get into some of the technicalities. And let me just run the numbers down. The Dow's down 215 at 17,357. The S&P is down 26 at 2,025. The Comp Index is down 68 at 49.76. Gosh, a sea of red. But all of a sudden, you've got a little bit of green here, and that's gold. Gold is up 350 at 1075. My bias is ready to be looking at gold as the counterpoint to this here. It doesn't make it spectacular. It just says that at least there should be a cushion, some kind of a bottoming process here while the dollar takes a breather. We'll deal with that. Dollar is down 36 cents at 97.59. Silver's down 19 cents at 13.91. Crude oil is down again at 35.80s. Oh, man, I showed you last night. I showed you that tower, the Jeddah Tower, Saudi Arabia, expected for 2017, 2018. And my contention was there's a real good chance that when that tower actually finalizes and comes to fruition, crude oil might be at levels that no one would even have dreamed of up until recently. All right. And bonds. Bonds are up 17.30 seconds at 126 and 27.30 seconds. Is it possible that we could still be in the Japanization of our bond yields era? Japan never had a really big move from the lows that it made. It went under 10,000, I believe, and it came back. Yes, it did double, but it didn't triple and quadruple like our markets. So what I'd say to my subscribers is, in the webinar that I gave, is it with the Fed, have we concluded that whole Japanization of our bond yields and mission accomplished? They can start moving it. I don't see how they can. I'm looking at areas that say there is potential weakness, extant and market weakness as well as economic weakness, but we're going to be watching things like commodities ready for a rally? Are they trying to get us into some kind of inflationary phase right now? Steel, aluminum, what's happening there? All right, well, there's a lot to talk about. Let me just go to this particular chart right here. Plop. This is what I show my subscribers every day. It's the second one that usually comes out early in the morning, and this shows you that the arch formation. Let me do this. Yeah, this will be real nice. Look at this. And that's a real big arch formation. I'm going to try to make it another color just for now. Let's just make this, color it in. Let me call it, I'll make this one red. I can't. I'll do it now. Yep, make that red. And it comes around red, right, like that. And then I'm going to explain to you something. It's just a beautiful phenomenon. You remember, I like to talk about the fact that I'm visual. Yeah, of course you've got to do certain mathematical things, but basically I'm visual. And the visual side of it says there are certain patterns that I know patterns almost as if I have, like people have perfect pitch. I have those patterns nailed into just they are embedded in my mind. In fact, the other day I was thinking, oh, I know that pattern. I know it so well. And then for the life of me, of course, I couldn't remember which stock it was, but the pattern I knew really well. It was a little embarrassing. Now look what I'm doing. All I did, and this is the remarkable thing that I've done ever since I began technical analysis way back. It just happens. Techniques jump out at me. At a certain point, you've done something so many times, all of a sudden you say, wait a minute, if works 90% of the time, then should become part of my vernacular, part of my tools. Well, look at this. There's this mirror image between the VIX index, this is the 120-minute VIX index, and the Dow 120-minute chart. And what I said the other day is we made a peak C1, C2, C3, C4 at the top at 17,914, couldn't break it. So we had to look at the downside, left side, right side, price, time action. It hit it, had a spectacular bounce. I think it was that Friday or something. And then look what happened. It comes back down, takes out the 17,425 low, goes to 17,403, tries to rally yesterday. Has a spectacular rally, actually, and then kaplop. It comes back down, and today it goes even lower. But look at the volatility index, up at 22.27. Now, what I had said yesterday, and also mentioned it in my webinar, is that there are two things that are going on. One is that there's insurance, and the other is the market itself. That's the reason why when the VIX, the volatility index yesterday was in the 19s, you got a move of 190 points, 220 actually, in the Dow. I mean, that should not happen. That's because there were two minds. There was the mind that was buying or short covering, whatever they were doing. They were pushing the market up. And then there was the one that said, ho, 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 I'm not, this is the season for surprises. I don't want a bad surprise, so I'm going to buy insurance. And that's what portfolios were doing, and that's what they're doing now. I have to tell you, at 22.27, for the Dow to be just testing the 200-period exponential moving average at 17,353, it's down. Yeah, it's exactly, yeah, well, that's where it is. And the 200-period is just a tad high at 17,360s, I think. And not to be under 17,210 says, just be real careful out there, because if there is a positive surprise and the market treats whatever news there is positively, if that VIX comes back to the 16, 15, 14 area, this market has a lot of upside potential. So there is an overreach right now in nervousness, which is not commensurate with the price of the Dow or the S&P. And I'm always a little nervous when I see that. Okay, I just wanted to mention that. Now we can get down to business. I had a very interesting email. Every once in a while I get this email saying, don't tell me you're short, don't tell me you're long. and Al sent another one, and he said, all those people at 203 were shorting their SPY, and I bought. And I'm looking at this and I'm saying, you know, Al's done a great job by reverse engineering every time the market is at a certain point and there's a kind of an hysteria at the one end. He's doing the opposite. And that's great because that really does work. But it only works. I usually have a rule of thumb, but I've only got 2 thumbs. So the rule of thumb goes to 3 thumbs. That's a little difficult. And that 3 thumbs says, you'll have something that works maybe twice. It could work 3 times. Invariably, by the 3rd time, the market is already known about it and it starts to discuss it. And what I'm talking about is this trading band right here. The reason why I have to take this a little bit more seriously is that the MACD is really quite poor and the stochastic is quite poor in the Dow daily. And it's breaking the 200-period moving average, which does make that 17,210 a target. So it's when it's kind of recognized you've got to be a little bit careful. And at first, it looked like a fantastic trade. Now it's still a nice trade. I don't think he's been stopped out. I just wanted to mention that sometimes when things look a little too obvious, that's when you have to be a little bit careful. I just wanted to say that. And look, I know you've got your stops. I don't have to be telling you, Al, what you're doing. I'm just saying that this is the one time that you might get the fooler, and that was the fooler we just had. Now I think we've double bottomed. Now I think we can have a bit of a rally, and I'm going to talk about this now because it's Technical Friday. I wanted to show you something. I'm always so impressed with this, and then I just don't use it for a long time. One of the reasons being is because I do my own homework. I kind of get these numbers, but look at the way the numbers pop up here. I'm not going to tell you what's going on. I'm just going to say, look at this chart. There was a low right here at 2019.75, 2019.75. And look, this red support area at 2021.50 to 2019 is right there. And then there was a rally and it took out resistance of 2027.95. The next one that popped up was 2035.20 as a resistance. And then the second one was a little lower. This is actually unusual. Was at 2033.63. What was the high of this move? 2033.75. Well, this thing works in 25-cent increments, and the actual technique works in fractions. So it comes back down in the pattern that I love to talk about. Remember the U-shape? Oops, I shouldn't have done that. I should have done this. In the U-shape pattern, there's the inverse U-shape, the arch formation, the lowercase h pattern. And it doesn't take out that low. It goes right back to this dashed line that I drew. See what I'm saying? I'm saying that sometimes you can do this work, but you can also have numbers that are really like, for instance, John Logan shows numbers. When you look at, where is it? I'm just going to try to get it right now. I hope I can get it in time. I missed it. There it is. Okay, the art of timing the charts. There are numbers as well, but they have different implications. That's Dave White's program that he developed from Tom's analysis. And I'll talk about it when we get back. Dow's down 200.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, Basil Chapman, Tiger Technicians Hour, and I just want to thank all our hosts from earlier on for just great programming, great show, just terrific information. Really enjoyed it, and folks, keep listening to TFNN. I think, well, I don't have to tell you, you're listening out for a reason. So it's really fun, and it's just exciting, and it's great, terrific information. And I'm going to go to Robert in Chicago. Hi, Robert. How are you?
Oh, very good, Basil. How are you?
I'm well, thank you.
So what do you think about this action on WFM?
So tell me, what's going on with Whole Foods Market?
I don't know. I was looking to short this thing.
Yeah. You know, shorting at this, you see, actually, this is, I'm pleased you brought this up. I gave a talk the other night at a particular meeting, and I brought this up. I said, I was talking about markets and how you've got to separate your emotions and your thinking from the actual charts themselves. And what I said is, I was with lay people, just, regular folk recently, and I don't know how it came about. They were talking about, I don't remember either they were talking about the stock market or they were talking about Whole Foods. I just can't remember what the issue was. And I said to them as a group, I said, I'm going to ask you a question. If I said to you, which stock would you think is higher, McDonald's or Whole Foods? Now, of course, McDonald's is a restaurant, Whole Foods is not, but McDonald's, for a certain percentage of the public, represents everything that's wrong in food, let alone restaurants, but just McDonald's is just terrible, right? For another sector of the United States, Whole Foods represents the very best of green food. I don't mean green like broccoli, but I mean just everything to do with health and all that stuff, right? And I'm going to show the chart to the folks who are looking in the den or looking at Tiger TV. Here's Whole Foods having gone from 65.59 in October of 2013. I distinctly remember saying, I think Whole Foods from the competition that I'm looking at is going to meet up with a lot of pressure. And my thinking is it's making a hat trick top, meaning monthly, weekly, daily. And it could be time and price that we see. I didn't expect it would go from 65 to be cut to be cut in half by going down to 28.73 in November. Now, I don't know what the news is today. Maybe someone will tell us in the den. There's always someone who knows something about something. And I'm just going to say to you, it's fantastic because it's leg A, B, C, and this is D, a spiral to the upside. So now I'm going to show you Whole Foods, even with a spiral, and I'm going to show you McDonald's. And we've got McDonald's right here. And McDonald's is, as we speak, it's 1 day off its all-time, I believe, leg C in the monthly. Is that even possible? Yeah. All-time high. I can't believe this. It's trading at 116.17, down $1.03. Yesterday it did its all-time high of 117.51. So it's less than 2 points of its all-time high. So now let's go back to what I wanted to talk about. And your question is a really good question because the concept of shorting, now I go to two Whole Foods, which are just, one is about a mile and a half away, other one's maybe less than 2 miles away. They're both probably about the same distance. And here in Newton, Massachusetts. And it just turns out that I follow things really closely at both supermarkets, and they do different things. It's really interesting. Kind of the same, but different emphasis because they're different size. And my thinking is that they are working. I have to commend them. I have to say that Whole Foods, to keep up with the pressure, with all the things that go on in the purchasing of not just goods and services, but in the food industry and in the sector itself, is really dynamic. We also here have what's it called? Egeman, something, I'll get the name in a minute. Just slipped my mind because I wasn't focusing on it. And they're in the area as well, Wegman. Wegman, and that's a little bit of competition, but it's on the other side of town. So my thinking here is that Whole Foods might have gone through its worst, whoops, let me write that again. Whole Foods, this is a peak D in McDonald's. Whole Foods might have gone through one of its worst periods. I would have to say one of its worst periods since 2006, when it had the same kind of lengthy decline to this little doji low. So at this particular point, I've got a left side, right side price time edge. And I think we were talking about it, that said my target would be the 25.66 low of August of 2011 with a left side, right side price match, which goes to May of 2016, and it keeps hitting the support line. So let's do this, because I don't want you to be early here for a short, but I do think it's going to do a retest. I also think it's getting real close to some kind of a base. We'll be back with Robert in Chicago straight after this, and the Dow's down 240.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. So I did a little research, and the only thing I could come with is that there's an update here. It says at 10 o'clock, 12:11. Update hearing, ITG sees Whole Foods Q1. Let me just read this. Sees Whole Foods Q1 sales comps tracking better than expected, near minus 4.8 billion, down 1%, respectively. Highlights rebound in traffic trends over November. So that's the only thing I can see. You've got the ratings here. I don't think the ratings are going to make much difference. So my thinking here is that this is, let me get rid of that. Okay. I do see it coming down, and then I think it's going to hold it's going to go under 29-ish. That's the way it's looking right now. If it does break under 29, then it's going to hang around and get to the 26, and the 3 to 5 point range is going to be, that's where it'll get stuck. That's kind of what I'm thinking right now. So this is probably, in a sense, a gift, because even if the market turns around at any point in the next 2 days to the upside, this is moving up on news, and it'll be carried maybe just a little bit higher. So here's my thinking. Will you use options, or would you actually short?
Actually short it, but I would consider options. Basil, this has been moving. It's just not today. It's really been in the last, I would say, 3 weeks or a month. It's been moving off that 29. I guess I'm not even. I know today's a move. but it's been moving off that 29 area probably for the last 3 weeks or about a month. And I guess let me ask it this way then: is there an upside target where you would consider not shorting or not putting on puts?
I'm just now doing a little, I'm going to be doing, here we go. So this is what I want you to do. The pattern that we're looking at right now is the inversion of the Chapman wave stalk leg formation. And it says that there should be at some point, unless it takes out 3450, and it takes it out on a weekly basis and holds above that. So it's got to close above 3450. Can't just pop up and then come back down again. There's a stalk leg formation that says it should break under 2873. And that's where it gets into that whole area of the 200-period moving average plus the left side, right side price time edge, and hold that whole thing. And you can see I've got here a dashed trend line, and that trend line is called the Chapman wave diagonal target price line. And that also comes in back, all the way to May. So that's a little far out from where we are, because you could do that in 6 weeks. You don't have to wait to May. But I tell you what I'm thinking here. I would set in place an option, a put option, the option, but the strike price wouldn't be here. It would be at 32. It would not be down at 30, making it more like a lottery. I'd put it at 32 as if you were trading the stock, but you're having an option, which means you're paying hundreds or thousands or something rather than the entire amount of shorting, right? So that's the one thing. I would put it out to February. I wouldn't put it to January even. I'd put it to February. Why? Because if this thing's coming back, it's going to go past 32 and just like a hot knife in butter. It's just going to go right through, and it'll hit 30 before you even know it, in the pattern that I call the dreaded Eiffel Tower. It looks like an Eiffel Tower. It has this swoop to the upside. It looks like a single leg A, and then it comes all the way back down. And you've got time. So even if it goes a little higher, why? Because my objective here is that the technicals are so weak in the monthly chart that, yes, there could be a bounce, but at 4.49%, the chances are that the stochastic will remain in the single digits for a while longer. That tells me that you've got time on your side for the downside. So here's my thinking. One way is to look at the 32. It doesn't have to be 32. My thinking is 32 because you're much closer. You're going to be paying a little bit more, but the speed with which it's going to take out that 32 level, if it starts to head down, could be so quick that you'll make up that premium in no time at all. That's really what I'm thinking about. Okay. Now, I'm also going to say to you, this is a question that I'm going to pose that I would ask you to also pose to Kevin Hinks. Maybe Monday you can call him and say, hey, I'm looking at Whole Foods going down, and I'd like to know, what would your strategy for be an option play if I was giving it time into January and February to go towards the 28, 26 area? That's kind of the question that I would have. Now, where am I wrong? And that's the reason why I'm saying maybe start off with an option rather than with the stock right now. I'd be wrong if it starts to close above on any day, because that could be a whole week that it closes above 34.50. If it just pops up the intra-week, but then it closes down in the 33 or 32 area, that's perfect for you. That's a failure. But I am wrong if it does that, and then it starts to hold, and the general market comes down, and this thing's holding like a rock. That says, hold on, you're going to have to wait, because 35.52 is the 9-period moving average of the monthly, and it hasn't even touched that since it broke down back in April. So that's very significant. So those are the levels that I'd be looking at. And as it stands right now, I'd probably say to you on Tuesday, why don't you speak with Kevin? If you have a chance to talk to him on Monday, I'll just pop me an email or something, or give me a call. And on Tuesday, we'll look at it again and we'll see exactly where it is. Maybe that'll be the time to be putting in a position.
Thanks very much, Basil. Excellent analysis. I appreciate it. Thank you.
Thank you very much. I appreciate that. That's Robert in Chicago. It's an excellent analysis as long as it's right. Jerry in Back Bay. Jerry, how are you?
All right. How are you?
I'm well, thank you.
I just thought one of the things that this guy missed on Whole Foods
is
one firm that follows options.
Yes.
said that there were 5,000 auctions bought, and there's speculation, rumors of a takeover.
Really?
That's the main thing driving the stock. I mean, it wouldn't go up all this much
So
on that
I'll tell
report
you,
that came out this morning.
let me just add this then. If there are rumors of a takeover, that means that Whole Foods suddenly becomes in play for the next year. I'm always a little nervous about stocks that are in play because they have these sudden spurts to the upside.
I'm not involved because this either is going to fall apart or it's going to go up a lot, and I have no idea. Yeah.
And the other thing that I'd be thinking of is if I know the mentality of whoever the guy is who runs Whole Foods, I've heard him interviewed so many times, I don't think he wants to be a takeover candidate. I think he loves running it. I think he's done a great job. I spoke about this the other night. I said that Starbucks, Schultz has done an amazing job. He might now be bumping into a lot of resistance because he's in so many different areas. Whole Foods has done an amazing job, but he's had to contend with a different economic dynamic, because he's got the economics of even the lower grade, I don't know how you define that, the lower grade, yes, of supermarkets that are now having so many of the so-called health products, the greens and the vegetarian, all this sort of thing, that makes it a little more difficult for Whole Foods to keep that client, the ones who don't just go to Whole Foods all the time, but go to different supermarkets for different things. So that is great information. I'm sure that Robert is. I hope Robert's listening to that. I'll repeat it just in case Robert had to get back to listening on whatever device he is. Robert, there were options on Whole Foods that suggests that there might be takeover. It might be a candidate. That shouldn't alter the weakness within Whole Foods technically, but it offers Whole Foods support that says every time there's a rumor that surfaces, it's going to give the spike of 2 to 3 points. So that's the thing. So that makes it even more important that if Whole Foods by January the 15th, somewhere around then, is below 29, that says those rumors are going to just surface every 6 months or so. But I know from my own experience that any company that gets rumored to be a candidate as a takeover, somehow or other, that just surfaces. It can go on. We've seen certain, I can't remember, certain stocks, the rumors have been pervasive for 5 years, 10 years, and they never get taken over, but it always surfaces. So you just want to be aware of that. Thanks, Jerry. That was very important.
Yeah, I just a quickie. I at the meeting on Wednesday, it was sort of a spastic discussion of when I brought up that thing about the 290 billion of put options expiring. Yeah, I think that's sort of influencing the market. I mean, because if I were a trader, and 65 to 70% of the daily volume is trading, sort of thing. I would not have heavy positions, long positions, if I thought there was a chance something like this would cascade. And then it gets self-fulfilling. So as they lighten up the market, now it's gone below 2 key moving averages, so that gets more selling. So
let me just quickly repeat what Jerry had said. Jerry was at the meeting where I was a speaker the other day, and he brought up the fact that there was incredibly heavy put buying, right?
Options.
Put option buying. Yep, put option buying.
Expiring on next Friday.
So that would be put options with the expectation. And now we don't know what the other positions are, but if it's really heavy,
yes.
you can't counteract that very easily. It means that the majority of your position is really weighted in that area. You could ameliorate it by doing other things that people don't see, or you could have over a period of days been buying other the calls. But the fact is that the weight of evidence says that, and we've already seen a decline. They might buy this morning. You might have seen that some of it dissipate. We don't know. But what really is important, and Jerry brought up this issue, and I said that is something to keep in mind. And we had a little discussion with someone who trades options all the time, every day. That's how trades the futures every day for a living. And so it was an interesting discussion because there were different perspectives. But to my mind, it cannot change the thinking that the weight of evidence is that we've seen the pressure of the downside. Even yesterday, when the market spiked up 200 points in the Dow, it still only closed up 80. The S&P was only up 4 or 5 points. So that kind of pressure is pervasive. Now we don't know. I would say now we don't know, because we broke to a new low, weekly, just a 5-day low in the S&P. So something might have been done to change that. We won't know. But the fact is that was good. That was good information. Now, Jerry, I tell you what's very interesting. If you're looking at the Dow, let me just get this chart right now. If you're looking at the Dow, we are still stuck. Remember, I spoke about that trading range. That as weird as it feels, because we've basically had, in about, I would say, in 10 sessions, we've had what in other periods you've experienced over 3 months. It could even be more, but let's say 6 weeks to 3 months. So the condensation means that everything, all the focus has been on this short-term nervousness, and as a result, you've seen the volatility index go into the 20. Where did it go? The volatility index right there go into the 22 area. 22 is where.
Wow. Yeah.
Very few times have we been up in this area without some kind of a pullback in the next day or very, very soon afterwards. So this is saying there is a lot of nervousness out there, but it's not necessarily nervousness that says the market has to crash right now. It's a nervousness that says, you know what, if I'm wrong, I want to have volatility on my side. I don't mind paying a little bit for my volatility so I can keep my portfolio. To my
like
thinking,
insurance.
I believe from a lot of people I've spoken to over the last 3 months, it's almost a pervasive thinking here that I'm done with stocks per se. I want to be buying the SPY. I want to be buying the index. And I really couldn't care for the next year because I know it's going higher. There's a lot of that thinking, which makes me a little nervous if, in fact, in January or even starting now, there is a deeper correction. And that's the reason why in my webinar last night, I was saying these are the things that have to happen. And if they do happen, we're going to see if there's an area in the market that says we are now the area of that we were the area of discontent. And now we are the area that's going to be able to help some of those portfolio managers be long while everything else, the high techs like the UA, Under Armour, and that type of stock starts to take it on the chin. And that's really the issue. How do we consolidate now? Do we have another rotational correction, or is it deeper? That's going to be the big issue.
Yeah, we might get a really good springboard once we make a bottom on this thing, but I don't know if it might not go into next week with that, not knowing what's going to happen.
I think at least by Tuesday, it's still going to be choppy like this, at least, I think. Yeah. So thank you so much for that information, Jerry. Always appreciate it. That's Jerry in the Back Bay, Boston. Have a great weekend.
Thanks for the meeting. Thank you.
Thank you very much. Let's go to Mike in Thailand. Mike, how are you? Mike, you there? Yes. Hi, Mike. He'll be on. I hope. Yes, you're there. You can hear. I can hear myself, so you are on. There's a delay. Just say hi. Oops. Before we get the break, say hi, Mike, so I know you're there. Oops. All right, we'll see if Mike's there. Mike from Thailand wants to talk about the trend. I'll be back. Basil Chapman, Dow's down 224. S&P's down 26. Don't forget, after this, you got Nico and Paige. Great show. And great shows all the rest of the day. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Real quickly, I've got a couple of questions. One is the S&P December 2015, like December 2012. It's kind of like that in a way. Yes, I'll answer that more on Monday. The HYG, next question. How low? Well, my target would be 77.90. The left side, right side price time match, and that should occur by January, and it's at 79.50 right now. It's real close. The HYG, that's going to be a real test. My thinking right now is that if it breaks that, it's not going to be good. Next question is the index chart. Can you compare this to 2000? I'm just going to put up the QQQ, and as we do that, I'm going to go to our caller who's come back from Thailand, all the way from Thailand. We've got Mike in Thailand, and there's the chart, and you've gone all the way back. You haven't hit the 120 mark from 2000. It's in leg E with a new recovery high. I have to say that so far it's acting very well, but the technicals are not quite confirming. I'll talk about that on Monday. Mike, how are you?
Hi, Basil. I'm okay today. How about you?
I'm well, thank you.
Good. Yeah, just as I asked you if you could hear me okay, we get cut off.
Oh, you're
So-
sounding fantastic. So let's hope that keeps
Yeah.
going. Yes. So your question is?
Okay, I thought you put up a good point before about the VIX, how high it was, and I'm waiting for it to reload again now, and how it could just back off, and then all of a sudden we could bounce here. And also, I would like to know your opinion on the trend. It started out, skyrocketing high. It was as high as 353, 3.53, right? And now we're down to 139, 1.39, and we're slowly inching our way towards.
Mike, did
what do you have to say about that?
Mike, I have 255 as the high. Maybe mine's belated. I don't think so. My high was 255, a penny under the 256 high of the 8th, and it's now at 119. It's come down huge. So that often happens on options expiration day. It goes down to below, sometimes down to 16 or 17, very low on option, and that sometimes messes things up. But at this particular point, this short-term trading index suggests that there will be a weak opening. Someone else says 353. I wonder if mine's. I usually have good prices on this chart. Anyway, it felt like it should have been up in the threes, so maybe mine's a little delayed for some reason today. But I'm looking at this. My suggestion is the short-term trading index suggests that within 2 days, there should be a sharp rally of between 9 and 12 S&P points that should turn the cash indexes up, and then there should be a pullback after that. That should be within 2 days. So people
all right,
say.
let me stop you there. Can you repeat that again? I'm sorry, I didn't.
My rule of thumb is when it gets this high, that within 2 days you're going to have a reversal to the upside. Of course, in these days, it sounds like you could say that at any time. You don't need an indicator. But my rule of thumb is invariably, when you get it this high, there should be a sudden upside surge in the S&P futures, and that should translate. That should translate to a really good move in the cash index. That's the S&P and the Dow, and then you have to see if it holds, because if it starts to fail, it comes back. But what it does say is be a little careful about shorting, because at any point there could be a real sudden move to the upside, and it's kind of a heads up. Just be careful, and that should be within 2 days. Sometimes it happens the same day, so it could be kicking in right now. So just got to be real careful.
I covered at a little after 10. I covered all my shorts.
You know what, Mike? I think that that's a good thing to do. Even if on Sunday night the market pulls back, you've got your profits. I think this is a period for taking quick profits, sitting back. Congratulations. I'm with you. That was a good move. Thanks so much for calling, Mike. Have a great weekend. Thanks, folks. Stay tuned for Nico and Paige. Have a great weekend. Check out my opening call, and you can.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.